Hi everyone, welcome to the stock market update. And it's a really critical, indeed pivotal time for the market. So a really important one, this one, so pay attention. Okay, so first of all, I'll give you the price earnings ratios as ever. One measure of valuation, not the only one, not necessarily the most accurate, but one measure of valuation. We see the financials being relatively undervalued. Yet again, they're in green. And the energy sector. Like I said, it's only one measure of valuation. You can see a lot of the market is relatively overvalued, which would give cause for those who want to see the market fall to say, well, here's a reason why. And indeed, that has been the story right across the board, even for some of the relatively undervalued sectors, as I've pointed out. On a price earnings growth metric, where you want that number to be below 1 to suggest a company is undervalued, you've really got the energy sector, oil and gas, and all of those, not even so much the financials anymore in that. And I guess a lot of their earnings growth projections have been cut back. So price earnings growth is the metric for valuation we've used here. And price earnings growth is a measure of the share price relative to the profit growth of the company. And as I said, you want the number essentially to be below 1, and there's very few which fall into that. So let's zoom in to the S&P 500 and what's worrying me at the moment. You see this, the monthly MACD, which I said tends to override everything. I thought it was starting to flatten, getting ready to go up. In actual fact, whoa, it is not. It is continuing lower, as we've seen with these. So those who've said that they expect the market to fall have been very much in the right. Those who've said that this is just a bear market rally and it'll fall back have been in the right. Those who've said no, we're likely to go up, which I didn't, and those were the risk lovers, they're proving wrong at the moment. Let me just move those off there so you can see it clearly once again. So that's where we are at the moment. Now, remember, the S&P 500 from the start of the year to the bottom moved down about 23%. That's how much it dropped. And if, like us, you were waiting each month for the new approved list, which I produce, and things weren't looking good, so you said, well, I'll wait for the next month and the next month and the next month and the next month. Well, you've probably saved yourself quite a bit of that. But where are we? What might happen? Well, this is probably the most likely move we're going to get now. What happens is things like this. And then you end the year somewhere like that. That's probably the most likely. If somebody put a gun to my head and said, what do you think is going to happen? That's where we are. At the moment, like I said, that moving lower, the weekly MACD looking lower, the stochastic moving lower. And if you look at the stochastic, when it's dropping like that, and it's done it in the past, and you see this moving low, and you move this lower, what happened? Well, that's what happened. You can get, when all of these are aligned moving lower, you can get quite sharp moves to the downside. Okay, if one of them's moving down but the others are moving up, well, you get a mixed picture and things can go sideways. So my worry is we could get sharper falls. We'll see whether or not it breaks below that, but I'm keeping an eye on. That's why I give you weekly updates so you know exactly where we are. If you're risk averse at the moment, you don't buy anything into the markets. If you're more risk loving, you'd get in, which I don't recommend, because you might be able to get things cheaper. What are some of those things you might be able to get cheaper? Well, let's have a look at them. So I'm looking at some of the bellwether stocks. That's Apple. Okay, each one of these is a bank which has given a buy rating or a hold or a sell, which is in red there. Okay, these are the dates down here. And what do we see? Well, with something like an Apple, I've tried to give you my best projections as to what might happen. This is where we are at the moment, right? And I don't think we'll go to level 1 from where we are at the moment, which would mean going to the top of this channel that it's been going on, which would mean a 17% rise from where we are at the moment. Sorry, I beg your pardon, a 43% rise from where we are at the moment. Let me just clear that up so you can see that better. Okay, so if we went up there, which would be the top of this channel, you'd get a 43% rise. If we ended up at 0.2, you'd get a 17% rise from where we are at the moment. And that rise to 0.2 could be like this. Who knows? It doesn't have to go in a straight line, obviously, or most likely won't. If we got the worst case scenario, which I think is this 0.3, you'd be down about 2% from where you are now. You can see why people might want to wait until October before getting in, because they might say, well, I'll wait till it gets to point B. Then at least, if it does go this 0.2, I'll be better off. So even if you're looking at something like Apple, if you're risk averse, you'd certainly wait. If you're risk neutral, you might say, well, I'll average in, I'll buy a bit here, I'll buy a bit here, and buy a bit here, see what happens. Just in case it continues going up, which I don't think it will sort of do a V-shaped turnaround. Okay, so that's where we are at the moment with that. I've given you 3 projections. I think the most likely one is probably going to be that one, the middle one, on that. Okay, let's have a look at Microsoft. Now what I've done here is I've shown you how it dropped 30% from peak to trough. Okay, then we've drawn these channels, which are the upper ranges along which it's traversed and the lower ranges, and a lot of it's off the maps. You can't fit everything into one chart. And I've said, well, what would happen if from its current levels, which is at this bottom channel, in a year roughly, it just skidded along there. So it might go up and down like this, but say it just ends up there. Well, you get a 31% return. Not bad. I mean, we're making a big assumption here that that upward channel will hold, and that's why I'm giving you weekly updates, because that MACD is pointing down, and interestingly, this might crack lower. If that cracks lower, all bets are off. Okay, so at the moment, if you said to me, Alpesh, I'm thinking about Microsoft, should I get in? I'd say if you're risk averse, no, because of that. If you're, and watch my weekly updates, if you're risk loving, which you shouldn't be, I'm not even going to talk to you because at the moment you should be risk loving. If you're risk neutral, you might average in, you might as well buy a bit here. Anyway, what's the most likely scenario? Well, I think that's your worst case, and I think that's your best case, okay, of what could happen. So in about 11 months, you could be up 76%. If we go back to that longer term trend, let's just assume you're going to be closer to there. That's not bad, okay? If you double leverage, that's 60%, but we need this channel to hold, and that's going down. So let's just wait another week, see what happens. Amazon, I've done a similar thing for you. I've done a lot more analysis than I normally would with these things for you, because the markets were a bit tricky, and I think people need a bit more information when that is the case. So I'm hoping you're finding it all very useful. Okay, and do give me feedback if you are, because if you're not, if I don't get any feedback, I'll stop doing it. That's about a 40% drop down there. Can't quite see it from peak to trough. These are all the buy recommendations that Amazon's just received. So much for all the bears. And that's just in August and September that they've got those. So what are these scenarios? Well, if it stays along this lower channel, then from its current level, which is here, you're looking at, within about a year, a 7% drop, okay? You're losing about 7%. If instead from here, it ends up closer to here, you're looking at a 30% gain from today's values. Now, personally, I'd wait, because that's still dropping, and I'd wait because I might be able to get in here. Now, I'm not trying to time my investments, or you might buy average in. But you can see why you might average in. You might say, well, I'll get a bit here, and if it goes down, I'll get a bit there, but if it goes up, at least I'm in. And that's your gain from today's price, which is 30%. Okay, that's what you're playing for. Were it to shoot up to the upper band, you get an 85% return, which I don't think's that likely. So you can see sort of the different scenarios playing out. You might even look at one of these and say, right, that's really useful. I think, you know, I might print this out, take a photo and print it out. Okay, that's one way to go. Meta platforms, I won't go into all of these now, but again, it's a waiting game and you can sort of see projections and all the rest of it. Costco, this is where we are with this one, and you can see the peak to trough dropped nearly 30%. It's rallied, it's come off again. It looks like it could be dipping. I mean, those are dips, so in the short term could be dipping. And if it went along this lower trend line, which I projected there, so I've sort of given a worst case, then from today it'd only be up 10% in a year. Okay, so I've given a worst case. You might say, well, actually, I'll wait up, I'm risk averse. I'll see if I can get in here, because by then I'll get a better than 10% return. Yes, indeed you would. So you can see why and how these things play out. PayPal, well, it's fallen off substantially. It's now rallied significantly. This is more flatter, and I think the moves up in this, you know, I projected 36, 40% in over a year. But in actual fact, that was from that low down there. We've already got a substantial part of that already happened. Okay, So the issue is, does it go down, or does it just sort of fiddle along there, or does it go up there? I'll do more projections on this next week as things become a bit clearer regarding PayPal. Westlake, I've just done some of these as just more of a bellwether, just to share some charts with you. And Qualcomm, you can see these aren't ones I'm saying, oh, these are incredibly important, but Johnson & Johnson comes up in the news a lot. That's why I've drawn it, and you can see how so many of them are so similar to other charts as well. And again, in future weeks, I will do more projections, because I might say, well, now I can see that that's a base. What kind of return are we getting if we go back to the high within a year? What might we get? So it's really a question of giving you more on these going forward. And you can see with Katera, I've actually done that, so in about 5 months. If this just goes on this upward trend, you're looking at about 21% return in 5 months. Not bad. Okay, so I'll continue doing these projections for you, and I'll do them for Halliburton in future as well, and Marathon Oil. Now, Occidental I've been doing for a while. As you know, I'm in Occidental. I got in at that point, which is when I said that worst case, this could happen. Significant drop, but it's roughly around the time Warren Buffett also got in, and he's probably expecting this to happen, and you can see it's staying on course for that. And if that does indeed happen from when we first bought it, we'd get about a 37% return, which I'll take. Okay, so you can see the math, you can see the thinking. I'm letting you into more of the thinking into all of these. Devon, you can see the upward trend in place for that one and what we're expecting. I'll do a percentage projection for that as well, sort of going forward, and what 12 months would look like if it stayed on there for you for next week. I'm in no mad rush given how the S&P has been performing to do this, but we'll do more of these for you. Got a bit more slides coming, don't go away. Don't forget my campaign for $1 million, where you can learn a lot more about investing, lots of free resources, especially my Telegram channel. Dow falls more than 1,000 points due to Powell, the Fed Reserve chief, talking about interest rates rising and so on and so forth, and basically monetary policy to remove liquidity from the market. And he's glad the markets are falling, because he was fearful of asset price inflation. He wants to scare people into spending less, and obviously stock markets falling in the US scares people into spending less. So that's what we've had. So I don't want you all getting all bullish and excited. On the trading side, you can see one of the favorite currencies has been sterling New Zealand dollar, 30-minute bars. And it's been giving us some smooth trends and signals on the pipspredator indicator. Okay, so if you ask me, well, what should I do in these falling equity markets? Well, you might want to look at the pipspredator indicator, because it allows you to trade short and long in non-correlated assets as well. Okay, another interesting thing is this chart that I came across. US Commodity Price Index 10-year rolling growth figures. And you can see, going all the way back to 1815, where somewhere down here we're projected commodities are going to potentially be eye-wateringly in the ascendancy. So I'll probably do a future webinar talk on commodity exchange traded funds. Apple, right? So what do you do in these falling markets? Well, if you're looking at the pipspredator indicator, you've got Apple, 30-minute bars. You can see you can short it. So you can make money on the shorts, even though you might be long, and that gives you returns in the short term and the long term. Hope you all found that helpful. Let me know if you did. Thank you.